Hey traders and investors, it's Serge Berger here. Today we need to look at biotechnology stocks. Biotechnology stocks, of course, have been a major winner over the past few years. In fact, coming into 2015, they were on a multi-year stretch to be the best performing industry. Um, and of course, ultimately that ends. And indeed, that started ending last year. And the IBB here, which is the Nasdaq Biotechnology ETF, currently is let's see, roughly almost 40%. That dropped almost let's call it 35% off those 2015 highs. Now, I will make it clear that I do think that biotechnology has further to drop. In fact, I don't see any reason why the IBB can't get into the low 200s at some point this year. But for the time being, I actually think we're presented with potentially a really juicy counter trend bounce. If you keep in mind, and I keep reiterating this, that bear markets, which by most definitions we are now in, since most stocks at broader markets are more than 20% off their highs. Not so much the S&P 500 just yet, but I would think that's just a thing that's just going to take a little bit more time. So by that definition, we should be prepping for some sharp counter trend rallies. So bear market short covering oversold rallies. So if you look at the IBB here, you can see that from a MACD perspective, which is just a way of measuring sort of how far a stock or an asset is below its sort of near to medium term moving averages in this case, you can see we are once again reaching extreme oversold areas, which coincides with roughly where this MACD was last last October and before we had a sharp rally. If we now look at this a little bit further out, we'll also understand that we do have some pretty decent areas of support here. So there's a good amount of price history if we look back to just 2014 at several spots. So there too, we should have some decent support from that perspective. And last but not least, if we zoom in a little bit closer on the chart, you'll see that the IBB has now actually traded below its 8-day moving average, which is this blue line, more or less has traded below there since last December, so since the end of 2015, and that's actually quite a long feat to accomplish. So what I'm seeing now is we're very exhausted here. Again, you can also look at the MACD on a daily basis, and you see we're very oversold. And we finally on Wednesday saw some pretty decent signs of what could be a final capitulation of the bulls, and i.e. the bears getting really tired. And so I would think that we would need one more bullish confirmation day. We're not yet there, and as I'm recording this on midday on the 4th of February, we haven't yet had it. But if the IBB can get, let's call it about above 270 on a daily closing basis, I would see no reason why that wouldn't confirm Wednesday's lows, and we should be able to see a real good probability to rally into the very high 200s. So sort of look towards 290 to maybe 300 or so, using those lows down here as the stop loss. Again, we still need a confirmation buying day, and I think that's what most people do wrong when they buy these bullish reversals. You have to wait for confirmation. If you guys want more information on all the stuff that I do, you can head over to thesteadytrader.com. We just launched the Clubhouse membership, which gives you all the premium access to my real-time trade alerts and analysis and members-only webinars and daily videos and all that kind of stuff. If you want to do that, you can go to thesteadytrader.com, click on or browse over products, and then click on the Clubhouse membership trial, where you can give that trial the product a try for just for 30 days. Otherwise, guys, please also like the video and subscribe to my channel. And as always, I'll see you in the next video.